Hey guys, over the last 2 months, I've discovered something called options trading. And I've fallen in love with the world of options trading so much that I've decided to become a full-time options trader. So today, I'm going to lend you a hand and offer you the easiest explanation on the internet of what options trading is. I'm going to be using an example of insurance to explain how options work. All of us understand insurance really well. So let me get into the example. Here I have Utsav, somebody who's interested to insure his car for the next 1 year. And let's say we have Nishant here, who represents an insurance seller, ready to provide Utsav the insurance deal for his car for a premium of 10,000 rupees so that he can insure his car for damages for the next 1 year. So the insurance buyer, Utsav, will hand over the premium of 10,000 rupees to the insurance seller, Nishant. And now Nishant is responsible for bearing all costs for damages of that car over the next 1 year. Utsav, the insurance buyer, will benefit from this deal if the car gets damaged over the period of the next 1 year, during which the cost of damages is greater than the premium of 10,000 rupees. Nishant, the insurance seller, will benefit if the car does not get damaged, and he can basically pocket the entire premium of 10,000 rupees. So if you really think about it, insurance is nothing but a bet on an outcome. In this case, the outcome is about the car getting damaged or not. Options work the exact same way. There are two main components to an option.
One, the premium, which is the cost of entering the bet. And two, the strike rate, which is the definition of the outcome event of the bet. A typical options contract looks something like this. Bank Nifty, February, 37,000 CE, trading at 313. This is an insurance or options contract for the stock index Bank Nifty. CE here stands for call option. 313 rupees is the premium or the cost of entering this bet. 37,000 is the strike rate or the definition of the outcome event of this bet. When you place bets on this contract, you are betting on whether the index Bank Nifty reaches this outcome of 37,000 or not.
So you can be either of the two roles, the option buyer or the option seller. The option buyer would benefit if a certain outcome is achieved, such as the market's hitting a certain level, versus the option seller would benefit from the outcome of the bet not being achieved. So the market not hitting a certain level.
Choose to see things from the perspective of the option buyer or the option seller. Both of them come with their own unique advantages and have different strategies to make money.
I hope that was a really easy, simple and intuitive example for you to understand what options are.
I also take a workshop to teach people about options trading and the strategies that you can use to make money off options. So if this ever interests you, do hit me up.
Going forward, I'm going to be shooting a lot more videos on about options, about trading and about how I go about the options market. So stay tuned for more to come.
Hey guys, I hope you had fun watching the video.
And for more videos on personal finance and options trading,
Don't forget to subscribe. What he said.